Right now, as you're watching this video on your smartphone, you're holding a device that contains a metal that's rapidly disappearing from our planet. And when it runs out, the entire tech industry as we know it could collapse. I'm not talking about lithium. I'm not talking about rare earth elements. I'm talking about silver. The same silver in your jewelry, in your coins, but more importantly, the silver that makes every single electronic device on Earth actually work. And here's what's terrifying. For the fourth consecutive year, humanity is consuming far more silver than we're producing. The deficit in 2024 alone reached 149 million ounces. That's the equivalent of 10 months of global mining production just gone, vanished from the market. And it's getting worse every single year. Apple shipped 225.9 million iPhones in 2024. Samsung shipped 222.9 million Galaxy smartphones in the same year. That's nearly 450 million devices requiring silver components. And that's just two companies. When you add Xiaomi, Oppo, Vivo, and every other manufacturer, we're talking about well over 1 billion smartphones produced globally every single year, each one requiring silver to function. But here's where it gets absolutely insane. The tech industry isn't even the biggest consumer of silver anymore. Solar panels are devouring silver at an unprecedented rate. In 2024, the solar industry alone consumed 197 million ounces of silver. To put that in perspective, in 2015, solar panels only used 60 million ounces. That's a 289% increase in less than a decade. And the demand isn't slowing down. China increased its solar capacity by 45% in 2024. The International Energy Agency projects 4,000 gigawatts of new solar capacity additions through 2030. Each solar panel requires approximately 20 grams of silver. Do the math. We're talking about hundreds of millions of ounces of additional silver demand, just from solar energy alone. Now you might be thinking, okay, silver demand is high, but can't we just mine more? Can't supply catch up with demand? Here's the brutal reality. Global silver mine production in 2024 was 819.7 million ounces. Sounds like a lot, right? Except it only increased by 0.9% compared to 2023. Less than 1% growth while demand is exploding in every direction. And here's the kicker. You can't just decide to mine more silver. Unlike gold mines, where companies specifically target gold deposits, approximately 70% of silver production comes as a byproduct from mining other metals. Copper mines, lead mines, zinc mines, gold mines. Silver is the secondary product. This means that even if silver prices double or triple, production can't easily ramp up because it's tied to the economics of these other metals. Mexico remains the world's largest silver producer, contributing about 23% of global output. But much of this comes from aging mines, or polymetallic operations, where silver is just one of many metals being extracted. Peru, the second largest producer, has faced operational disruptions, community disputes, and regulatory challenges that have actually decreased production in some regions. Total global silver supply in 2024, including both mining and recycling, reached approximately 1.01 billion ounces. Total demand was 1.16 billion ounces. That gap, that deficit of 149 million ounces, had to come from somewhere. It came from above-ground inventories, from stockpiles, from reserves that are being drawn down year after year after year. Industry experts at Metals Focus and the Silver Institute warn that we are now in the fifth consecutive year of structural silver deficits. Between 2021 and 2024, the combined deficit reached 678 million ounces. That's equivalent to 10 months of the entire global mine supply for 2024. These aren't minor shortages. These are massive, persistent imbalances that are fundamentally reshaping the silver market. Let me break down exactly where all this silver is going and why tech companies like Apple and Samsung should be absolutely terrified. Industrial demand for silver hit a record 680.5 million ounces in 2024. That represents 59% of total global silver demand. Just a decade ago, industrial applications accounted for around 50%. Now it's pushing 60% and growing. The electronics and electrical sector is the single largest industrial consumer. This includes everything from smartphones and tablets to wearables, laptops, desktop computers, gaming consoles, smart home devices, the list goes on. Silver is used in virtually every electronic component because of one simple fact. Silver is the best electrical conductor of any element on Earth. Better than copper, better than gold, better than anything else we've discovered. In your smartphone right now, silver is everywhere. It's in the touchscreen, conducting the tiny electrical signals from your fingers to the processor. It's in the circuit boards, connecting components with microscopic silver traces. It's in the switches and connectors, ensuring reliable electrical contact. It's in the antenna systems for cellular, Wi-Fi, Bluetooth, and GPS signals. It's even in the camera modules and the flash LED systems and in various sensors throughout the device. Every single iPhone that Apple manufactures requires silver. Every Galaxy phone, every Pixel, every Xiaomi device, they all need silver. When Samsung produced 222.9 million phones in 2024, each one of those devices contained silver components. When Apple shipped 225.9 million iPhones, every single unit required silver to function properly. Now, the amount of silver in each individual phone is relatively small, typically measured in milligrams or a few grams, depending on the model and features. But when you're producing hundreds of millions of units, those milligrams add up to millions of ounces very quickly. And it's not just the quantity, it's the criticality. There is currently no viable substitute for silver in many of these applications. Scientists and engineers have tried. They've experimented with copper, with carbon nanotubes, with graphene, with various metal alloys and composite materials, but nothing matches silver's combination of electrical conductivity, thermal conductivity, corrosion resistance, and reliability in miniaturized electronic applications. Sure, you can use copper for larger components, and many manufacturers do to save costs. But for the highest performance, most compact, most reliable circuits, silver remains irreplaceable. The photovoltaic sector, meaning solar panel manufacturing, has become silver's most dramatic demand driver. In 2024, solar panels consumed 197.6 million ounces of silver, representing 19% of total global silver demand, compared to just 5% in 2014. This explosive growth shows absolutely no signs of slowing down. Current solar panel technology requires approximately 20 grams of silver per panel to create the conductive pathways that capture and transport the electrical energy generated by photovoltaic cells. And here's what's interesting. The solar industry is actually moving toward more advanced panel technologies called N-type solar cells, particularly TOPCon, and HJT technologies, which are more efficient but actually require more silver per panel than the older PERC technology. Industry reports from organizations like VDMA indicate that while manufacturers are working hard on what they call thrifting, which means reducing the amount of silver used per panel through technological improvements, the sheer volume of new solar installations is overwhelming these efficiency gains. China, which dominates global solar manufacturing, is installing massive amounts of new capacity. India announced a 24,000 crore rupee production-linked incentive scheme in 2024 to boost domestic solar manufacturing. The University of New South Wales has published research warning that the solar sector alone could deplete between 85 and 98% of global silver reserves by 2050 if current growth trends continue. That's a terrifying statistic. We're looking at a renewable energy revolution that could literally consume nearly all available silver within the next 2.5 decades. Electric vehicles represent another massive and growing source of silver demand. A traditional internal combustion engine car uses approximately 25 grams of silver in various electrical components. An electric vehicle uses up to 50 grams of silver, roughly double the amount. With global EV production expanding rapidly, particularly in China, Europe, and increasingly in the United States, automotive silver demand is projected to potentially triple by 2030. Silver goes into EV battery management systems, power electronics, electric motors, charging systems, and the extensive electrical architecture that makes modern electric vehicles possible. As the auto industry transitions away from gasoline engines toward electrification, silver demand from this sector is becoming increasingly significant. Then there's 5G infrastructure. The rollout of fifth-generation wireless networks requires dramatically more silver than previous generations because 5G operates at higher frequencies and requires more sophisticated antenna systems, more base stations, and more complex electronic components. Each 5G tower contains significantly more silver than a 4G tower. As countries around the world continue deploying 5G networks and start planning for 6G, this creates sustained long-term demand for silver. Artificial intelligence and data centers are emerging as another surprising source of silver demand. AI computing requires massive data centers filled with servers, processors, cooling systems, and power distribution networks. All of this electronic infrastructure requires silver. As companies like Google, Microsoft, Amazon, Meta, and others invest hundreds of billions of dollars into AI infrastructure, they're creating enormous new demand for silver that didn't exist just a few years ago. Medical applications represent a smaller but growing segment of silver demand. Silver has natural antimicrobial properties, making it valuable in medical devices, wound dressings, surgical instruments, and healthcare facility surfaces. The COVID-19 pandemic increased awareness of infection control, and many healthcare facilities are now incorporating more silver-based antimicrobial technologies. This isn't a massive demand driver compared to electronics and solar, but it represents another consistent source of consumption. So, with all this demand overwhelming supply, what's happening to silver prices? In 2024, the average silver price jumped 21% compared to 2023. Silver touched $35 per ounce in 2024, the highest level since 2012. As of early 2025, Silver continues trading around $30 to $34 per ounce, still elevated compared to historical averages. Major financial institutions are making bullish forecasts for silver. JP Morgan has projected that silver prices will average $36 per ounce by 2025, supported by strong macro fundamentals and a supportive supply-demand backdrop. UBS raised its silver price predictions, forecasting $38 per ounce by June 2025. A panel of precious metals professionals at the London Bullion Market Association predicted silver could reach $45 per ounce, representing more than a 45% jump from current levels. Some analysts are even more aggressive in their predictions. If the supply deficit continues and industrial demand keeps growing, particularly from solar and electric vehicles, some experts believe silver could reach $50 to $60 per ounce by late 2026. That would be an increase of 80 to 100% from 2023 levels. Such dramatic price increases would have profound implications for every industry that depends on silver. For Apple and Samsung, rising silver costs directly impact their manufacturing expenses. When you're producing hundreds of millions of smartphones annually, even small increases in component costs multiply into hundreds of millions or billions of dollars in additional expenses. These companies operate on carefully calculated profit margins. Materials cost increases can't simply be absorbed forever. Eventually, they get passed on to consumers through higher device prices. We're already seeing premiumization in the smartphone market. The average selling price for smartphones globally hit a record $356 in 2024, driven by premium segment growth. Apple's iPhone Pro models, which contain more advanced components and likely more silver than base models, saw shipments increase 11% in the 16 series compared to the 15 series, exceeding 55 million units. Samsung's Galaxy S24 series, particularly the Ultra model, achieved strong sales and was more popular than ever before. These premium devices command higher prices, giving manufacturers more room to absorb increasing component costs. But there's a limit to how much consumers will pay, especially in price-sensitive emerging markets that represent future growth opportunities for these companies. The big question that tech companies are desperately trying to answer is simple. Can silver be replaced? Is there an alternative material that can do what silver does in electronic applications? The answer is complicated. For some applications, yes, alternatives exist. Copper can replace silver in larger, less demanding electrical applications. It's significantly cheaper and much more abundant. Many manufacturers already use copper wherever possible to save costs. But for high performance, miniaturized applications where space is extremely limited and reliability is critical, silver remains superior. The problem with copper is that it corrodes more easily, especially in humid environments. It has lower electrical conductivity than silver, meaning you need more of it or thicker traces to carry the same current. In smartphone design, where every fraction of a millimeter matters, that's a significant disadvantage. Researchers are exploring various alternatives, including carbon-based materials like graphene and carbon nanotubes, which have excellent electrical properties. Graphene, in particular, has remarkable conductivity and could theoretically replace silver in some applications. But these materials face enormous challenges in mass production, cost-effectiveness, reliability, and manufacturing scalability. They remain largely experimental or limited to niche applications, rather than being ready for mass-market consumer electronics. Some companies are investigating silver-copper alloys that reduce pure silver content while maintaining acceptable performance. Others are developing new manufacturing techniques that use less silver more efficiently, such as finer silver traces in printed circuits or alternative deposition methods. The solar industry has made progress in reducing silver loading per panel through improved metallization techniques, but these efficiency gains are being overwhelmed by the sheer volume growth in solar installations worldwide. The reality is that in the near to medium term, meaning the next 5 to 10 years, silver remains essential for electronics manufacturing. Any transition to alternative materials would require years of research, development, testing, qualification, and then gradual implementation in manufacturing. This isn't something that happens overnight. So tech companies like Apple and Samsung will continue depending heavily on silver for the foreseeable future. What does all this mean for consumers, for investors, for the tech industry, for the global economy? If silver prices continue rising due to persistent supply deficits and growing industrial demand, several outcomes become likely. Smartphone prices will increase. We've already seen significant price growth in flagship devices over the past decade. The iPhone 16 Pro starts at $999. The Samsung Galaxy S24 Ultra launched at $1,299. These prices reflect not just advanced features and capabilities, but also rising manufacturing costs, including materials like silver. If silver doubles in price from current levels, and some analysts think this is possible, it could add $10 to $20 or more to the manufacturing cost of each smartphone, depending on silver content. Multiply that across billions of devices, and you're talking about an enormous impact on the industry. Some manufacturers might respond by reducing silver content where possible, potentially compromising performance or reliability in some areas. Others might pass costs through to consumers with higher retail prices. Companies with stronger profit margins like Apple might be better positioned to absorb costs than lower margin competitors. This could accelerate consolidation in the smartphone industry, with weaker players struggling to compete as costs rise. The solar industry faces potentially even more dramatic challenges. If silver prices rise substantially while remaining essential for panel efficiency, solar energy could become more expensive, just as the world is trying to accelerate renewable energy adoption to combat climate change. This creates a potential conflict between environmental goals and resource availability. Some research institutions are working urgently on silver-free solar cell technologies, but viable alternatives at scale remain years away. For investors, the silver market presents both opportunities and risks. The fundamental supply-demand imbalance suggests upward price pressure could persist for years. Industrial demand shows no signs of declining, with multiple secular growth drivers including renewable energy, electric vehicles, 5G networks, and electronics continuing to expand. Meanwhile, mine supply remains constrained by geological, economic, and political factors that prevent rapid production increases. Silver investment vehicles include physical silver bullion coins and bars, silver mining company stocks, silver futures contracts, and silver exchange-traded products backed by physical metal. In 2025, silver ETPs saw significant inflows, with institutions and retail investors increasing their silver allocations. Global silver ETP holdings reached 1.13 billion ounces, approaching all-time highs. This investment demand, when it spikes, can amplify price movements because it removes physical metal from the market, competing with industrial users. Some analysts warn of a potential silver squeeze scenario, where a sudden surge in demand, whether from industrial sources or investor buying, could overwhelm available supply of freely traded silver and cause dramatic price spikes. The silver market is much smaller than the gold market in dollar terms, making it potentially more volatile and susceptible to supply crunches. If industrial users like Apple, Samsung, and solar manufacturers simultaneously try to secure more silver supply to ensure production continuity, competing for limited available metal, prices could spike dramatically. Governments and central banks are also paying attention to the silver situation. Though silver doesn't get the same policy focus as strategically critical materials like lithium, cobalt, or rare earths, some countries may implement export restrictions or strategic stockpiling programs if they view silver as essential for domestic industries. China, which dominates solar manufacturing, may seek to secure silver supply chains. The United States, Europe, and other regions may develop policies to address potential silver supply vulnerabilities. Recycling will become increasingly important. Silver recycling from electronic waste, spent solar panels, and industrial scrap reached 193.9 million ounces in 2024, a 12-year high, and an increase of 6% year over year. This represents about 20% of total silver supply. As prices rise, recycling becomes more economically attractive, potentially increasing recovered silver volumes. But even aggressive recycling can't fully close the supply-demand gap given current consumption levels. The European Union's Circular Economy Action Plan emphasizes improved recovery of precious metals from electronic waste, which could boost silver recycling in Europe. Companies like Umicore are developing advanced processes to extract high-purity silver from discarded smartphones, solar panels, and industrial components. As manufacturing processes become more sophisticated at recovering and reusing materials, recycling efficiency should improve, providing more secondary supply. Looking ahead to the rest of 2025 and beyond, several factors will determine how the silver situation evolves. If economic growth remains strong globally, industrial silver demand will continue rising, particularly from emerging economies. China, India, and other developing nations are rapidly expanding their electronics manufacturing, solar installations, and vehicle electrification. This represents huge incremental silver demand beyond current levels. Alternatively, if global economic growth slows significantly due to trade tensions, policy uncertainties, or other factors, industrial demand could moderate, potentially easing the supply deficit situation. The Silver Institute's World Silver Survey 2025 specifically noted that U.S. tariffs and trade wars represent key risks to silver demand. Prolonged trade disruptions could slow economic growth and reduce industrial consumption, though investment demand might actually increase as investors seek safe haven assets. Technological breakthroughs could change the equation. If researchers successfully develop cost-effective, scalable alternatives to silver for key applications like solar panels or electronics, demand could moderate. But such breakthroughs are uncertain in timing and scale. Given the complexity of displacing an established material like silver that has been optimized in manufacturing processes for decades, any transition would take years even after alternatives are proven. New silver mine projects could come online and boost supply. Several mining companies are developing or expanding silver operations, particularly in Mexico, Peru, Bolivia, Chile, Canada, and Russia. However, the timeline from discovery to production for new mines typically ranges from 5 to 10 years, and many projects face permitting challenges, environmental reviews, community opposition, and capital requirements. Supply growth will likely remain constrained in the near term regardless of price incentives. What should tech companies do in response to this situation? Apple, Samsung, and other major manufacturers are likely pursuing multiple strategies simultaneously. They're working with suppliers to secure long-term silver supply contracts, ensuring access to necessary materials even if spot market prices rise. They're investing in research and development to reduce silver content in devices where possible through more efficient designs and alternative materials. They're participating in industry consortia and research initiatives, exploring silver alternatives and improving recycling processes. They're potentially building strategic inventory buffers to protect against supply disruptions. And they're likely conducting scenario planning to understand how different silver price levels would impact their business models and product strategies. For Apple specifically, the company's financial strength and premium product positioning provide some insulation against rising component costs. Apple has historically been able to command premium prices that give it more margin flexibility than competitors. The company's vertical integration in chip design and close supplier relationships may provide advantages in securing materials and optimizing designs to use less silver. Samsung, as both a major electronics manufacturer and a component supplier to other companies, has a complex relationship with silver demand. The company makes smartphones, tablets, televisions, appliances, and countless other electronic products. Samsung also produces displays, memory chips, and other components sold to competitors. Rising silver costs impact Samsung across multiple business lines, but the company's diversification and scale provide some advantages in managing supply chains. Smaller smartphone manufacturers with thinner profit margins may struggle more with rising silver costs. Companies like Xiaomi, which has grown rapidly by offering feature-rich devices at competitive prices, could face margin pressure if component costs rise significantly. This might lead to industry consolidation, with financially stronger players acquiring smaller competitors or weaker brands exiting the market. The silver shortage situation highlights broader challenges facing the technology industry and global economy. We're in a period of massive technological transformation driven by renewable energy transition, electrification of transportation, digitalization of everything, and artificial intelligence. All of these trends require vast amounts of raw materials, including not just silver, but also lithium, cobalt, copper, nickel, rare earth elements, and many others. The planet has finite resources, and extraction and processing of these materials has environmental and social impacts. We face a fundamental tension between our aspirations for technological progress and sustainability versus the physical constraints and impacts of resource extraction. This silver shortage is just one example of the resource challenges that will likely intensify in coming decades. Finding solutions will require innovation on multiple fronts. We need better recycling and circular economy practices to recover and reuse materials more effectively. We need continued research into alternative materials that can reduce dependence on constrained resources. We need more responsible and efficient mining practices that can boost supply while minimizing environmental damage. And we may need to reconsider consumption patterns and product life cycles to use resources more sustainably. For the average consumer watching this video, what does all this mean practically? In the short term, you're likely to see continued upward pressure on smartphone prices, particularly for flagship devices with advanced features. The pace of device upgrades may slow as phones become more expensive and users keep devices longer. This is already happening, with the average smartphone replacement cycle extending from 2 years to closer to 3 years or longer in many markets. You may see manufacturers promoting recycling programs more aggressively, offering incentives to trade in old devices, so valuable materials like silver can be recovered and reused. Apple already has robotic disassembly systems like Daisy that can recover materials from iPhones. Samsung has recycling initiatives in many markets. These programs will likely expand as material costs rise, and companies see old devices as valuable material sources rather than just waste. Product designs may evolve to prioritize repairability and longevity over constant new features, driven partly by sustainability concerns, but also by economic pressures around materials. Modular phones, easier battery replacement, longer software support. These trends could accelerate if materials remain constrained and expensive. You might also see more price differentiation in product lines, with a wider gap between budget devices using minimal silver and alternative materials versus premium devices that continue using more silver to achieve maximum performance. This is already happening to some extent, but could become more pronounced. For investors interested in the silver market, this situation presents both significant opportunities and substantial risks. Silver prices could rise dramatically if supply deficits persist and demand continues growing. Mining companies with silver production, particularly primary silver miners rather than byproduct producers, could see strong stock performance. Silver ETFs and other investment products could attract major inflows. However, silver prices are notoriously volatile, subject to industrial demand cycles, investor sentiment swings, and macroeconomic factors like interest rates and currency movements. The silver market has experienced boom and bust cycles historically. While the fundamental supply-demand situation looks challenging now, circumstances could change. Technological substitution could reduce demand. Economic slowdowns could cut industrial consumption. New mines could eventually boost supply. As with any investment, diversification and risk management are essential. What seems clear is that the silver situation represents a genuine challenge for the technology industry and broader economy. This isn't a temporary blip or short-term supply disruption. We're dealing with structural imbalances between supply and demand that have persisted for 4 consecutive years and appear likely to continue. The fundamental drivers on the demand side, including renewable energy, electrification, digitalization, and AI, are powerful secular trends unlikely to reverse. Meanwhile, the supply side faces significant constraints due to geological limitations, the byproduct nature of most silver production, long development timelines for new mines, and environmental and social challenges in expanding mining operations. These supply constraints can't be quickly overcome even with strong price incentives. Companies like Apple and Samsung, along with thousands of other technology and industrial firms, will need to navigate this challenging environment. Their responses will shape not just their own futures, but potentially the trajectory of entire industries. Innovations in materials, science, manufacturing processes, product design, and recycling systems developed in response to silver constraints could have broader applications and drive progress in resource efficiency and sustainability. The silver shortage that could reshape Apple and Samsung's future is really a microcosm of larger challenges we face as a global society. How do we continue advancing technologically and economically while respecting planetary boundaries and resource constraints? How do we balance competing demands for limited materials among different industries and applications? How do we innovate fast enough to overcome resource constraints through efficiency and substitution? These are not easy questions, and the silver situation doesn't have simple answers. But awareness is the first step toward solutions. Understanding the scale and nature of the challenge allows companies, investors, policymakers, and consumers to make more informed decisions. The silver crisis nobody's talking about deserves much more attention because it affects technologies and industries that touch billions of lives every single day. If this video opened your eyes to the reality of the silver shortage and its potential impact on the tech industry, please hit that like button, subscribe to the channel for more in-depth analysis of critical issues affecting technology. Hang in markets, and share this video with others who should understand what's happening. Leave a comment below with your thoughts. Do you think Apple and Samsung will successfully navigate this challenge? Will smartphone prices surge? Are you concerned about silver supplies for renewable energy? I'm genuinely curious to hear your perspectives. The silver story is still unfolding. The next few years will be crucial in determining whether the tech industry can adapt to this resource constraint or whether the silver shortage becomes a major limiting factor for innovation and growth. One thing is certain. The era of cheap, abundant silver for industrial applications is ending. We're entering a new paradigm where this precious metal is increasingly precious, not just in name, but in reality, and that's going to reshape the technology landscape in ways we're only beginning to understand. Thanks for watching, and I'll see you in the next video.